Hey guys, this is Sean LaRue with Franklin Loan Center. This is another episode of Monday Mortgage Madness. And today we're going to be talking about how you guys can save some money throughout the transaction, save a couple bucks, and there's a couple things that you can do to be a little more mindful up front on what you can do in order to save some money during your transaction. So here we go. When you order your appraisal, there's a couple of different things that you need to be mindful of before you order the appraisal. So if you're a real estate agent or a buyer, check in with the listing agent, check in with your agent if you're the buyer, and see if the carbon monoxide detectors have all been installed, that we've got really great smoke detectors installed. That'll save you a bunch of money, because this is a constant frustration with realtors and buyers and appraisers as well, really, because they're having to send out the appraiser usually at the last minute to do a re-inspection to make sure all the repairs have been completed. So make sure that you're asking that information up front, and typically you'll be able to save about $100 to $150 per transaction by avoiding what's called this 442 or an appraisal repair report. So that's a phenomenal opportunity. Work smart, have it done up front. And if you're really concerned about any other conditions of the property, as a home buyer, you're probably a parent, or you have some kids, or you've got parents that are going to be moving into the property for you as well, or with you as well. If there's anything that comes up that's health and safety related, like if there are any repairs or anything that you think would have to be done prior to moving into the property, chances are pretty good that the bank wants to make sure that you have all those repairs taken care of as well. So if you think that there's some things that are going to need to be done before you move into the property, just talk with your loan officer real quick. See if any of those things might be an issue, because it's a possibility that they could be a potential snag for you in order to close. The next thing that you want to do in order to save some money during your escrow transaction and to avoid some additional fees is to get with your loan officer regarding where your funds to close are actually going to be coming from. So typically you're going to do a wire transfer to wire in your deposit and your final funds for closing. And all those funds typically need to be verified on a bank statement within the last 2 months. Verify the source. Cash deposits can be a bit of a snag for some loan programs. So make sure you're communicating with your loan officer to make sure that your paper trail of your deposits and all the funds required to close are actually all verified up front, so that you don't have multiple wire transaction fees, which can cost anywhere from $25 to $30 per transaction. That could end up saving you guys some money as well. And not only that, but if you do it right, then you're not going to have to float additional funds. If funds do, in fact, if they're not qualified funds, then we'd have to put more money into escrow for verified funds, and then the amount that goes into escrow for that deposit, if they are unverified funds, or we can't paper trail them, like if it was a cash deposit, then you're going to have to float that difference, and that'll be liquidated back to you at closing. You can avoid all this by asking all the right questions, by working with your loan officer and making sure everything's all good to go. And lastly, you're going to want to make sure to keep your credit cards at the same balances to avoid further delays. You don't know this, but it is possible that a difference in a monthly payment of $10, $15, $25, or even $50 a month in that minimum payment amount could actually make or break your deal. So, try not to use additional credit cards. I'm going to be talking in another video about what a soft pull is on your credit report. We'll try to link that video up here. But there is this thing called a soft pull, and they are running your credit right before you go to Loan Docs, after you have loan approval, and before you get the keys. So right before you sign your loan documents, you want to make sure that you don't have increasing credit card balances, which would also increase those minimum payment amounts. And that'll be a great opportunity for you to skate everything through. Once you have the keys, you can apply for additional appliances, finance appliances, use credit cards, and do all that once you have the keys in hand. So, don't want to slow you up. Knowledge is power, You want to stay hungry for knowledge, and that's what we're doing here. So guys, that's just a brief overview of the top 3 things that you can do to save yourself some money during the purchase transaction for your new home. You'll want to make sure you take care of that. Make sure you minimize the fees and costs associated with your transaction, and make sure that everything goes smoothly. Please like, comment, subscribe, hit that bell. Love hearing from you guys. Are there some other things that you think that we could do to save money throughout the transaction, other than these top 3 things that I think that I pointed out? So if you have something extra that you'd like to add, I'd love to hear from you. You can comment below. Remember to hit that bell for other notifications for future videos. Subscribe, and I hope you follow me on my socials. I hope you make it a great day. This is Sean LaRue with Franklin Loan Center. I'm having a great day, and I hope you are too. Stay hungry and stay positive. I'll see you soon.